What's good? Welcome back to another episode of Where the Money. And we are episode 41, and you know we locked in on cryptocurrency right now. So let's get right into it. Today we're going to talk about the Xrp ETF that turned out to be a fake. We're going to go over cryptocurrency custody. What is it? Data models, how we use it, all that stuff. Then we're going to wrap it up with some very, very bullish news about the space. So let's get right into it. We got CoinGecko here, and we have Bitcoin sitting at around 36,400. We have Ethereum sitting at 1946, and we have BNB sitting at 243. So we've come down a little bit from the hype we've had, and to be honest with you, it just looks like we're settling into a range. If we take a look at BTC's daily price action on TradingView, so from what I can see, we'll probably be in a new range that'll look something like this between 34,000 and 38,000, but for a little bit more clarity on it, let's check some fib retracements really quickly. Coming from our all-time high of 70,000 down to our local low of 16,000, we're right in between the 236 and the 0.5. And it looks like we could stay here for a little bit. Or we could turn the actual 382 into support where we stay on top of it and stay in the new range, or resistance where we kind of stay in the low range. But let's check the fib from the local low to where we are right now. It's saying that we'll probably stay somewhere between 32.7 and 38.2. So if you're a trader, those are some good places to live, but I'm not a trader. The daily price action doesn't really matter too much to me. So let's get into it. So the big news, everybody, all the XRP fans got trolled or whatever. It's funny, but the space is starved for news right now. And this is exactly what I'm talking about. The price and the cryptocurrency and everybody went crazy after some fake news of an ETF came out. And all they did was go to the Delaware website and register for an LLC using fake information. You know what I'm saying? So let's try to keep some calm and rationale about everything going on, because keep in mind, this is still just a filing. As we talked about in the last video, there's a huge difference between someone filing an ETF, getting approved, and launching. And there's a step in between that we didn't talk about. Like, what if all these ETFs get denied? You know what I'm saying? Like, this process is a multi-year process. Now, it could be expedited because everybody wants it so bad, but normally these processes take between 1 or 2 years. Like, ETFs get sent somewhere and they get rejected and they have to make adjustments and they send it back and forth, and that could be a multi-year battle, normally between 1 and 2 years. But everybody is extremely confident that all the ETFs are going to get passed in 2024, and there's just no guarantee of that. I don't know why everybody feels that way. They may know something I don't, but you know what I'm saying? That's just my prediction. I don't think we're going to get a bunch of accepted approvals of ETFs next year, but if we do, more the merrier, good for the space. I'm just not betting on it. But we're going to listen to BitGo CEO discuss it really quickly. He said some interesting things. I'm going to break it up into about 3 parts, and we're going to go into it.
Look, we're all excited about the ETF. It's definitely getting closer. We're definitely seeing signals in terms of the conversations that the applicants are having with the SEC. BitGo's working with a bunch of these guys as well. So I'm optimistic, but I think it's quite likely we have another round of ETF rejections before we get the positive news. And
look, all he said was he believes there's going to be another round of rejections. I believe there's going to be several rounds of rejections, but that's the only difference between what I believe and most people believe. I believe it's going to take a little bit longer than everybody else is expecting it to, because we're so locked in right now and we're biting on every little bit of information that we get. And I think we need to calm down, because there's a lot of people getting ready to move into this space, and I don't think those things like that move that fast. But let's hear them out.
It really comes back down to market structure. Gary Gensler's made no secret of this point. You have to separate exchanges from custody. The CFTC market structure is already this way. You have to separate exchanges from custody. The equities markets are this way as well. 15 months ago, we had Sam Bankman-Fried marching all over Washington, D.C., advocating his 7 key points of regulation, where he...
So pay attention to what he just said. Just 15 months ago, FTX was top dog. Sam Bankman-Fried was top dog. That's how fast everything moves in this space. You know what I'm saying? Like a year in crypto is like 10 years in traditional finance. That's how early this space is, and that's how fast things are moving. It's going to slow down eventually, but you know what I'm saying? We have to pay attention because all the information that we talk about in cryptocurrency videos is all time related and time sensitive. That's how fast everything moves. But we need to really keep a steady head and just continue to learn as much information as we can. I'm gonna try to present it to you as best as I can. So let's keep going.
Basically said, let me take on all functions. It's going to be great. It's going to be efficient. We'll do that. Obviously, we have a very different thought process on it right now, but a lot of these applications are with Coinbase custody, and Coinbase, while I'm not trying to say that they're an FTX by any means, they are taking on also kind of that same playbook. In addition to being an exchange and a custodian, they recently got approval for an FCM. Of course, they got a broker dealer. What this means is there's a lot of risks in that entity that aren't fully understood. And I think that the SEC could quite likely come back and say, nope, you got to separate out these things fully before we're going to move forward. Good news, like there's solutions right now of custodians like BitGo that focus 100% on that. We don't do trading and exchange work. So we can.
So the last point he was making was separating exchanges from custody. So what is custody? So I was at a cryptocurrency conference, ran into a fella, and he gave me a really, really good breakdown on custody inside of cryptocurrency. And my initial thought was, because you never really think about how companies do their custody. So my initial thought was, I thought like a Coinbase would have everybody's like cryptocurrency inside of one large account. And he said that's called an omnibus. And he said that's exactly how you shouldn't do it. Each person with an account should have their own Ethereum wallet, not one large Ethereum wallet or one large wallet with everybody's cryptocurrency in it. That's how FTX went down. So he sent me a little read along about custody. So basically, what is a custody? Anyone holding funds on someone else's behalf is considered a custodial. You and I can be considered a custody. So like when you buy Bitcoin on Coinbase and they hold it for you, they're the custodian. But as you see with companies like HBCS, these duties are starting to get separated. They're starting to have separate institutions for custody and different businesses for custodial services. And he mentioned bad practices are considered an omnibus or a single account where all assets sit on the organization's balance sheet. And who did practices like this? FTX and Celsius. So that's bad business practices. And then he goes over qualified custodian, which says, some things you can do to make sure that you're using best practices for holding people's funds. Segregate client funds, not keep the assets on the institution's balance sheet, be audited by the regulators at random times of the year, do due diligence on all trust employees. I'm guessing those are all the employees who have access to those accounts, perform independent outside audits, and make sure regulators have access to the customer assets in the event of an insolvency. So that's just a quick tutorial on custody because we haven't went through that yet, but that's just a quick little lesson and learn part that I think we should think about when we talk about all these businesses moving forward and maturing the information we're taking in. So let's wrap this up on some bullish news for the space. Y'all know I'm a bear, so we're going to wrap it up with some great bullish news for the space. Goldman Sachs leads $95 million funding round for blockchain payments firm Finality report. So basically, Finality is a blockchain-based wholesale payments firm. So they just got, $100 million. And, there's stories like this everywhere. Blockchain exchange, cryptocurrency exchange, blockchain.com raises $110 million for another seed round. They just closed $110 million round of funding led by Kingsway Capital. So this is a cryptocurrency exchange. And the point I want to make is there's so much bullish news going on for the space. Exchanges are popping up everywhere and expanding. Tokenization products are growing and is going to be a huge part in creating more liquidity and creating more markets in the space. ETF and more financial products are popping up everywhere. So if you're in cryptocurrency and digital assets, you can look on the ground layer and see the infrastructure being built for the future. That's why this is a subject that keeps me so interested. That's why I want to bring information out there to you. And that's why I believe everybody watching should be doing their own independent research and researching themselves so they can find the best opportunities to make some money in the future. None of this is financial advice, but I feel like this is going to be valuable information. And we're going to be talking about digital assets way down the line after it's already blown up. And I think that's one of, just a side note, I think that's one of the next things I'm going to be diving into is like, how to invest into tokenized real world assets. I think that'll be a good one to look at. So we're going to look at it. But that's going to wrap it up today. We're going to end on some really, really good bullish news like that. And as always, I appreciate y'all for rocking with me. Hit that subscribe button because we're going to keep bringing this information. We're going to keep growing. I'm going to holler at y'all.